Now, today we decided to talk about loan defaults as NPAs across banks have risen, and turns out that a lot of retail investors are responsible for the rising NPAs. We decided to talk about what exactly is it that's making Indians so delinquent in their loan payments, and how exactly can Indians become better managers of their money to ensure that they never come across a situation that will cause them to have to default on their loans, which in turn, by the way, has serious ramifications for your credit history and in turn for your financials as well. So we decided to bring on board CreditMate, and it is in fact none other than Jonathan Bill, who is joining us right now. He's the co-founder and CEO of CreditMate. And also joining me on the show is Harsh Roongta, a personal finance expert. So good evening, gentlemen. Thank you so much for joining in. And Jonathan, it's you guys at CreditMate that have actually drafted this India delinquency report of 2019. Just to set the tone of this conversation, what exactly does it throw up? What are the key findings?
So we, first of all, very happy to be here. Thank you for inviting me. We found that in the course of the last 6 months, we've been looking at how and the reasons for delinquency in loan repayments in India. And we found a number of things. First of all, we found some quite interesting differences between the way men and women repay loans or don't repay loans, as the case may be. We busted a few myths, some common preconceptions about which states in India and which cities are likely to be the most difficult to get repaid in versus the ones that are most payable. And we also found some of the key reasons that people are giving for missing or being late in loan repayments.
So, Jonathan, for those individuals who did not get their salary in time or saw problems in business, I mean, is it that clearly they did not have any money stored away for a rainy day?
First of all, I think if you look at the kind of people that we are, there's a broad demographic that we are collecting overdue payments from. But it is definitely the case that India typically has, especially as we get deeper into what I would call a mass market segment in India, then many of the borrowers are not that liquid, which means that if there are difficult circumstances, perhaps an overdue payment, salary delay as we discussed, maybe if you're a small or micro business owner, a slight downturn in your business, then that impacts your ability to repay your loan that month. So a lot of people are living close to the edge in terms of loan repayments. That's particularly the case where the EMIs are larger. The second thing I think that we're noticing is that some borrowers are just, these are fairly standard excuses. As an employer, for example, I definitely know that, we do tend to use the same old excuses over and over again. Medical emergency, death of a relative, all these kinds of things. So you have to take some of this with a pinch of salt. But for sure, there is an economic set of circumstances that are impacting some people's ability to pay.
Okay, all right. Well, Harsh, I'd like to get in your opinion as well on this. It's a well-established fact that things are slowing down a bit on the economic growth front, and hence, you could see the salary payments as well slowing down. Worst case, job cuts too. We've seen it in many cases. I mean, in India itself, Jet Airways saw it, MTNL. I mean, they're literally asking its employees to opt for VRS. So while one is employed, what are the steps that they should take to ensure that if they lose their job or if their salaries are delayed, they don't end up in CreditMate's India delinquency report?
I think basically, if I've understood this right, I've obviously not read the report, and I'm not sure what kind of borrowers, what is the population that report covers. But I think it probably looks at, and Jonathan can clarify that it probably refers more to the unsecured kind of loans. So to that much extent, I don't know how representative the findings are. But coming back to what you ought to do for a delay, I think one obviously is a contingency fund. I think not having a contingency fund is not right. And I think depending on the type of job, how long have you been in a job, etc., I think you would need a contingency fund that must be equal to uh, 3 to 6 months, maybe in a fixed deposit, maybe in a liquid fund. Uh, Another good contingency measure, which is not very high cost. See, liquid funds tend to be very high cost because it gives you a very low return. Another thing which may not be very high cost is a credit card with a very high credit limit. But the only issue with that is that it uh, for most people that actually turns out to be high cost because it leads to impulse buying, unnecessary buying, etc. So as long as you are confident that you will not use the credit card except in an emergency or in a contingency that we are talking about, the loss of salary, I think that is where that could come in very useful for a contingency at a very low cost. I mean, the annual fee effectively is the cost, provided you've not done any unnecessary purchases. So I think the straight answer to that is have a good contingency fund or a contingency measure, which a good insurance policy. I think one of the reasons is also medical costs. And I think medical costs in India, unfortunately, the cashless payment system in India is completely broken unless you have an employer policy. Cashless on private insurance, health insurance policies does not work. And again, here a credit card that you make sure you don't misuse is a great way to pay for medical expense in the interim while they are paid back as a reimbursement from the Mediclaim policy. So I think a combination of these things would be a good way to take care of this.
Well, it's interesting you mentioned credit cards and stuff like that because we are in the holiday season. You have all these online retail sales, etc., as well. So one is very tempted to, you know, indulge a little bit. But yeah, like Mr. Roongta said, you have to be a little controlled over there. So, Mr. Roongta, if a person finds herself or himself unemployed, what are the steps he or she should take? Because I'm sure, I think the first step you'd recommend is cutting down sharply on expenses.
Mm. Well, I know it's a bit like digging a well, when you are thirsty. So I think the steps need to be taken before. But in case you have not taken those steps, then I think the real choice for you is probably to liquidate some of the uh, what shall you say, some of the investments that are not very good. I mean, think of all those endowment and money back policies that you have unnecessarily paid premium for in the past. I think one of the ways to make sure that you don't continue paying premium on something that's giving you such a terrible return, plus probably you could borrow from them to tide you over during the contingency period. I think good old family and friends come in pretty useful because I think in India to keep the fact private that you have lost your job is pretty difficult. So, in which case, if it is not private, you might as well make use of it by leaning on your family and friends and obviously pay them back when you get back a job. I think tightening up your finances. I mean, you didn't do it when you had a job, and that's the reason you don't have a contingency fund. As they say, it's a shame to waste a good crisis. A job loss is a crisis for an employee, and I think it would be a shame to waste it. Tighten up your finances at least at that time. Uh, Use family and friends. Liquidate some of the low yielding assets that you might have, and I think that should help you tide over the difficult time.
All right. Okay. Jonathan, I want to come to you. Interestingly, you've mentioned that even medical emergencies were cited as a reason for non-payment of debt obligations. Did you see unpreparedness on the part of individuals on that point as well? Or do you believe that, like you mentioned, that perhaps it's just many a times just for the sake of giving an excuse? I mean, what was the average seriousness of the medical emergency because of which they had to dip into perhaps an amount kept aside for a loan?
I think that India is not yet, at a mass market level, is not yet in this sort of habit of creating, as I think we call it in the world, in a kind of personal finance way, an emergency fund of sorts that would cover you for, let's say, loss of employment for a few months, medical emergencies, unexpected circumstances. Most of the borrowers that we're collecting money from are not in that category. They are living typically month to month. And therefore, when there are downturns for them, whether that is an unexpected illness, whether they have to be hospitalized for a few days or a few weeks, then that does impact their earning ability and therefore their payment ability.
Like Mr. Roongta as well was pointing out, there have to be a certain number of months of your expenses that should be kept aside as a savings buffer of sorts. So that's, I think, extremely important to follow. If I'm not mistaken, I think it was approximately 3 to 6 odd months. The more, the better, obviously. But that's roughly that you should absolutely must keep aside as a contingency fund. Okay, now, Jonathan, I also want to ask you about the business side because you mentioned that a lot of individuals did say that we had problems in our business as well. Did you find a higher tendency of defaults among the smaller and mid-sized companies?
So we are primarily, in our survey and the lenders that we have on our platform, they are mostly all micro SMEs or SMEs. So for sure, we're dealing with people that, from right down to the level of a chaiwala in the street here up to a kind of small to medium-sized business. And in those cases, reasons for delay in payment or justification for overdue payment is often that business took a turn for the worse or that business is cyclical in some way.
Okay. Mr. Roongta, for small businessmen, do the rules remain the same? Because, more often than not, especially if it's a sole proprietorship, or just a single businessman with no form of legal liability of sorts, legal entity barrier separating his business and himself. So there's no distinction between individual money and business money. So do the, money management rules remain the same in that case?
Well, you are absolutely right, and especially when you're talking of micro SMEs, etc. I mean, at the best of times, their cash flow is stressed simply because if they have surplus cash flow, they just push it into the business to increase the working capital. They'll buy more goods so that they can stock up and sell, or they might sell their goods on credit because they're confident that their customers would pay them back. Uh, so very clearly, even at the best of times when business is doing well, they're strapped for cash. Now, when there is a downturn, the issue is that the debtors stop paying them on time. Uh, they're not their creditors who normally would give them credit, stop giving them credit. So they get really into a pincer kind of a moment where they get hit from both sides. Their buying drops. I mean, cash buying also drops because generally the businesses are down. And I think so very clearly for them, doing good management is a good thing. They should keep some money uh, outside their business as a contingency fund. But frankly, that's easier said than done. I mean, I have clients who are big businessmen and even they can't do it. Expecting a micro SME to really keep some money outside his business and not use it when he has it to increase the level of his business would be rather tough. So, I mean, it is a tough call, even for bigger businessmen. So for smaller businessmen, I doubt whether he would follow this need to keep a separate contingency fund.
All right. Okay. Jonathan, interestingly, your survey shows that women tend to repay their debt obligations in a more timely manner than men. So are women the more responsible one then?
So there's a couple of insights there. Definitely, we do see that where loans are overdue, then proportionately more women pay faster or are more prompt in correcting that repayment. So for sure, women are better repayers. But what I don't know, of course, is what the flow into that funnel is. And so it is likely that there are less women that are taking loans in India. However, it is also the case, I think, that lenders and insurers around the world, and certainly in India as well, will often favor female customers because they tend to have a slightly higher propensity to repay or to be a little bit more predictable in their repayment structure.
So Harsh, in that case, should women of the house then be in charge of the finances?
There is no doubt that women are more responsible, and there's plenty of data to show that. When the government is pushing out subsidy meant for the family, anything, whether it's food subsidy or whether it is health subsidy, whether it is the Ujjwala scheme, the subsidy goes into the women's account, because I think data shows that when it goes to the women's account, the propensity to use it for the benefit of the family is much higher. And I think something similar applies to loan. I mean, generally speaking, women are far more responsible with their finances, simply because I think they think about the family far more than relative terms than the males. So I think clearly they are more responsible. Unfortunately, in India, we have a culture where women have been kept away. I think deliberately, probably as a control mechanism, they've been kept away from financial decision making. And unfortunately, even though women in all other spheres have progressed, they've really progressed. I mean, you see women entrepreneurs, you see women CXOs, uh, but even those people who have progressed, you find when it comes to their own personal finances, they still leave it to the men in the family.
Right,
I mean, it's a paradox. It's a
right.
complete paradox
Of
that
course.
somebody who's more responsible with money
Sure.
isn't handling the money.
And I hope women listening in are really taking to heed what you suggest, Mr. Roongta. So, Jonathan, many individuals don't understand what the ramifications are of a default. So, if you could explain that to us, how would it affect credit history? How would it affect future finances?
So we run a collections business, and what we are essentially doing is we're trying to help lenders with overdue payment collection. But actually also I think that what we're trying to do is we're trying to build a slightly better and more accountable collections infrastructure in India. And one of the reasons I think that's important is, whilst collections is a necessary reality of all lending, not following up strongly enough as a lender does have consequences, because what it means is that some people who did not intend to be defaulters, perhaps who did not realize when they took the loan it was their first loan that they should pay regularly and on time, if you don't follow up with them and if you don't do collections, then they may get themselves in trouble, as you rightly point out, later in life, because these lenders are going to be reporting to the credit bureaus. And what may seem like a frivolous payday loan this month, or an upgrade to your phone by clicking a few buttons on an online website when you bought the phone and you've entered into a loan agreement, that can come back to bite you, especially as you go through perhaps more important life debt, things like marriage loans, or things like housing loans or educational loans. So for sure, borrowers need to be aware that they have obligations, and I think it's one of the key requirements for lenders is to remind and educate, especially the increasing number of first-time borrowers in India, that there are consequences if you don't pay on time.
Okay, well, on that note, Jonathan as well as Harsh, thank you so much for joining us on this edition of the show. And I think it's very timely as well, because I'm sure a lot of us want to now splurge a little on the sales, on some retail therapy, end of the year retail therapy. Don't think that's, you need to do so wisely.